In partnership installment liquidation, as discussed previously, the conversion of non-cash assets, payment of liabilities, and distribution of the remainder to partners are done in more than one period. For the partnership not to violate any rule, that distribution to the partners must be done in a safe manner, as such, preventing any overpayments. The following are the schedules that may be done to achieve this objective. So we have cash priority program or cash distribution program and safe payment schedule. Cash priority program is done in advance, even before the actual sale of non-cash assets, while safe payment schedule is prepared every period wherein payments to partners are needed to be computed. Cash priority program answers the question, who among the partners shall be paid first and who shall be paid last? While safe payment schedule answers the question, how much cash can be safely distributed to the partners at a given point in time? Key element in cash priority program is the determination of loss absorption potential or capacity of the partners, while in safe payment schedule, maximum possible loss should be determined. So to illustrate partnership installment liquidation, let's answer the following problem. Vince, James, Albert, and Kath are partners of a very successful auditing firm. However, due to disagreements in managing the firm, they decided to liquidate. The statement of financial position just before liquidation reports the following balances. So the problem also states summary of the realization and liquidation proceedings for the 4 months, January, February, March, and April. Cash is distributed whenever available. Required, using both cash priority program and safe payment schedule, compute for the cash to be distributed to each partner in each month. Okay, so let's prepare first the cash priority program. So under cash priority program, the starting point would be the determination of loss absorption potential. Okay, so or LAP. Loss absorption potential or LAP can be determined by dividing the interest or capital account balances by the respective P&L ratio. Okay. So cash priority program. So first, the the interest, of course, interest of Vince, James, Albert, and Kath. Okay, so the interests are given actually. So the difference between the capital and the interest includes the loans and advances. So for this problem, there are no loans and advances, and that's why the capital will be the same as your interest. So anyway, Vince, 210,000. James, 187,500. Albert, 102,500. And lastly, Kath, 75,000. So now we have to determine the loss absorption potential. So we have to divide this by the respective P&L ratio. So 3:3 2:2. Okay, so 210,000 divided by 30%, 700,000. This is the loss absorption potential of Vince. And then 187,500 divided by 30% again, we have 625,000. Okay, and then 102,500 divided by 20% again, 512,500. Lastly, 75,000 divided by 20%, that will give us 375,000. Now, based on the loss absorption potential, we are going to rank the partners. Okay, so the highest one will be the number one. The partner with the highest loss absorption potential will be ranked as number one. Okay, and he will be the first priority. Okay, so in this problem, fortunately, okay, it is already arranged. So the first priority would be Vince. Second priority would be James, and then third will be Albert, and the last priority would be Kath. Okay, why is it that James is the first priority? Okay, he's the first priority because he has the he has the highest loss absorption potential. So in cases wherein the loss on realization amounted to 700,000, then Vince will not receive any amount of cash. So it means it will take 700,000 loss on realization for Vince not to receive any amount, but for other partners it will take less. So for example, Kath, if the loss on realization amounted to 375,000, then Kath will no longer receive any amount of cash, but Vince, James, and Albert will still receive some amount of cash. So in this particular case, Kath is the lowest priority, or is the last priority. That's why we refer to the loss absorption potential in ranking these partners. Okay, so after ranking the partners, the next thing is we have to determine the difference between priorities. Difference between the first and second priority, the second to the third, and the third to the fourth. Okay, so for first difference between priority 1 and priority 2. So that is 700 less 625,000. So this is 75,000. Next, the difference between the second and third priority. So 625 minus 512.5. Okay, so this is 112,500. And the last will be 512,500 less 375,000. Okay, so this is 137,500. Okay. Okay, after determining the difference, we can now prepare the cash priority or the amounts to be received by each partner whenever cash becomes available. Okay. So Vince, so this will be the priority. So first priority, it will be Vince. Okay, so Vince, the amount to be received by Vince will be based on this difference. However, not this entire amount of difference, because that pertains to the loss difference in the loss absorption potential. The actual amount to be received by Vince under first priority should still be multiplied by the respective profit and loss ratio. So for Vince, we have 30%. That's why 22,500 will be for the first priority. And then for the second priority, we have of course Vince again, but this time he will be joined by James, the second priority. Okay, so how much will be received by Vince and James? Okay, so it will now depend on the difference between the second and third priority. So that is 112,500 times 30% again, so 33,750. Okay, so as you can see, both James and Vince have the same profit and loss ratio, and therefore they will have the same amount to be received in this under second priority, so 33,750. And then when we compute for the total, to satisfy the second priority, we would need 67,500. And then the third priority, okay, so it would still be Vince and James, but they will be joined by Albert. Okay, and the amount to be received by each partner will depend on the difference of the third priority to the fourth. Okay, so that is 137,500 and then multiplied by the respective P&L ratio, so times 30%. So Vince should receive 41,250 under third priority, as well as James. For Albert, okay, so it will be 137,500 times 20% only. Okay, so that is 27,500. So to satisfy the third priority, we would need, okay, plus 41,250 again, 110,000. Okay, so once we have satisfied all of these priorities, the last priority, okay, so it will now include Kath. So all of these partners may receive, okay, may receive some amount of cash in accordance with their P&L ratio. So that will be your first priority. So as you can see, we were able to determine the amounts to be received under this priority, or who shall be paid first, who shall be paid last, okay, under cash priority program, even before the actual sale of non-cash assets take place, okay, or takes place. So now let's proceed to the computation of the cash to be received by each partner for every month. Okay, so aside from this priority program, we would need to determine the total cash available for distribution to partners. Okay, of course, the cash balance would not be distributed directly to the partners, but it will be first used to pay for all the liabilities, as well as for incurrence of any liquidation expenditures. So cash available for distribution to partners. And so this is another thing that we have to do every month. Okay, cash available for distribution to partners. So don't worry, we have a formula for this one. So the formula would be as follows. Of course, cash beginning plus the proceeds from sale of non-cash assets, okay, less liquidation expenses. Okay, liquidation expenses paid and liquidation expenses anticipated. Okay, so this will be your cash withheld for future liquidation expenses and unrecorded liabilities. So this one. Okay, so this one. Cash withheld for future expenses and unrecorded liabilities. Okay, so we have to deduct it also. Okay, what else? We have to deduct also of course, liabilities. Liabilities paid. Okay, so before we can distribute cash to the partners, we have to make sure that liabilities are paid. But in some cases, some of these liabilities, even if the liabilities are not yet fully settled, we can still distribute some amount of cash to the partners on one condition, that we have to withhold some of those amounts, or withhold those amounts of liabilities that were not yet paid. So again, we have to deduct. So regardless whether paid or unpaid, we have to set a portion or allocate amount to be paid to our liabilities, because they are above the priority, or they are on top of priority, okay, before the partners. So this is your formula. Okay, so this will be your, after deducting all of these items, you will get the cash available for distribution to partners, and it will take place, or it will be prepared or done or computed and determined every month. Okay, so let's see for January. For the month of January, how much is the cash beginning? Cash beginning for the month of January, the first month of liquidation, it will be your cash beginning in the amount of 50,000 pesos. Okay, so we have 50,000 pesos here. And then for the proceeds, so let's see. Okay, for month of January, the cash realized will be your proceeds, of course. So 115,000. So we have here 115,000. Next, liquidation expenses paid. Okay, so how much have we paid for our liquidation expenses? Okay, so here we have 5,000 pesos. Okay. So deduct. And then how about liquidation expenses anticipated, or the cash withheld for future expenses and unrecorded liabilities? So for the month of January, as you can see, no withholdings for cash for future expenses, so 0. Next, liabilities paid. Okay, so we have paid a total of 160. Okay, so 160,000. So we have to deduct it also from the amount. And then what else? How much are the liabilities unpaid? Okay, for liabilities unpaid, so we have a total of 375,000. We have already paid 160. So how much is the difference? So 375 minus 160. Okay, that will give us 215. So this is your unpaid liability. So we have to deduct it. 215. Okay, so how much would be the cash available for distribution for the month of January? So let's compute. 50 plus 115,000 minus 5 minus 160 minus 215. So as you can see, we have negative amount. Okay, so if it is negative amount, meaning we cannot distribute any amount to the partners. Actually, we still lack some amount of cash to pay for our liabilities. That's why we have unpaid of 215. Okay, so again, if the cash available for distribution is in negative amount, or actually 0, then we cannot distribute any amount to partners. So no distribution to partners. Yan. So for the month of January, they will not receive any amount of cash. What about for the month of February? Okay, so let's see how much is the cash beginning for the month of February. Okay, so the cash beginning would be equal to the cash withheld. Okay, for in the month of January. So cash withheld. So what will be your cash withheld? So your cash withheld for the month of January is this. Okay, it's composed of this one, liabilities anticipated. Okay, this is part of your total cash withheld, as well as the liabilities unpaid cash withheld. So as you can see, 215 and 0. So the cash withheld should be 215, the cash beginning. However, since we have negative amount, so to determine the cash beginning, it will be like this. Cash beginning is equal to cash withheld for future expenses and unrecorded liabilities plus cash withheld for unpaid liabilities. Yan. Okay. However, we have to deduct in absolute amount the negative balance. So deduct minus negative balance. Okay, so for this one, let's compute. So the answer is 0, of course, plus 215. So this is your cash withheld, total cash withheld, less 215 for negative balance. So basically, we don't have any cash. We were not able to withhold any cash, okay, in January because we still lack some amount of cash actually. Okay, the point here is it's supposed to be, the cash beginning balance is supposed to be equal to the cash withheld for the previous month. But since the cash available for distribution is in negative amount, so we have to deduct it. Okay, so for the month of February, in other words, okay, we have no cash. Okay, so another computation. Okay, so let's compute the total amount of cash in January. So we have 50,000 cash beginning balance, and another is 115. Okay, so that's your proceeds. So we have a total of 165. So from this amount, 165,000, we have paid 5,000 for our liquidation expenses. So we only have 160. And then this 160,000 has been used to pay off some of our liabilities. And therefore, okay, so we have zero amount of cash at the end of January. So that will be your beginning also. Okay? So for the month of February, the proceeds amounted to 276,500. Okay, so here we have 276,500. Okay, so let's see. Okay, expenses paid rather is 3,500. So let's put this here, 3,500. Okay, and then how about cash withheld for future expenses? Okay, so now we have 8,000 here. So we have to deduct 8,000. Okay, so cash withheld, it means it will not be included in your cash to be distributed to the partners. Then lastly, we have liabilities paid. Okay, so the liabilities paid amounted to 215. Okay, so do we have any more liabilities unpaid as of the end of February? Okay, no more. So we have we have paid all our liabilities. Okay, so let's see what would be the balance. So 276,500 less 3,500 less 8,000 less 215. Okay, so now we have 50,000 in positive amount. Okay, so what does it mean? It means we can distribute this amount to the partners, 50,000, based of course on our cash priority program. Okay, so this one. Anyway, so 50,000. Now, for the month of March, how much would be your cash beginning? Okay, so same principle, the cash beginning would be equal to the amount of cash withheld. So our cash withheld amounted to 8,000 plus 0. So 8,000. Now, do we have any negative balance in cash available for distribution? No, because positive na siya, okay? So that is 8,000. This is your cash withheld or cash beginning, okay? For the month of March. Actually, we can check. So the amount available, okay, is 276,500. This is from the proceeds, okay, from sale of non-cash assets. So we have paid 3,500 for the liquidation expenses, and then we have paid another 215,000 to fully settle all our liabilities. So we have 58,000. Okay, then we distribute this 50,000 to partners. So the remaining amount will be your cash balance at it should be 50. So the remaining amount should be 8,000. So this 8,000 is of course your cash withheld. Yan. So 8,000. So another proceeds for the month of March, we have 92,000. Okay, so let's put here 92,000. Okay, what else? So we have paid 7,000 for our liabilities. So less 7,000. And we have also withheld some amount of cash in the amount of 5,000. So another 5,000. Now, as to liabilities, okay, it is no longer our problem because it is fully settled. Okay, now, how much will be distributed to the partners for the month of March? So let's compute. So 8,000 plus 92 minus 7 minus 5. Okay, so we're going to distribute 88,000. Next, for the month of April, so the last month of liquidation. Okay, so how much will be your cash beginning? So again, your cash beginning will be equal to your total cash withheld. So 5,000 minus 0, 5,000. Since it is positive, so it will be your cash withheld, 5,000. Okay. Next, how much were the proceeds from sale of non-cash assets in April? Okay, so we have 80,000. So 80,000 here. Okay. And then liquidation expenses paid. So have we paid? So we no longer paid for expenses. Okay, and we of course no longer withhold cash for future expenses because this is the end of our liquidation. So total of course would be 85,000. So this will be the amount to be paid to or distributed to the partners. Okay, so after cash available for distribution to partners, we can now determine specifically how much should be paid to the partners. Okay? So let's prepare Vince, James, Albert, and Kath. Okay, so total. So for the first month, again, January. Okay, for the month of January, we are not going to distribute any amount of cash because negative. Okay, now, what else? For the month of February, since positive is our cash available for distribution, then we can distribute this 50,000 to partners. So the next question is how and to whom? Okay, so based on our priority program, based on this. Okay, so based on this. Okay, so first priority, we have to satisfy this. Vince, 22,500. Okay, so for the month of February, we can satisfy the entire first priority because the total cash available for distribution amounted to 50,000. Okay, so 50,000. So the first priority, so let's... Okay, first priority for Vince, we have 22,500. So here, 22,500. At again, 50,000. Okay, is the amount to be distributed. So how much is the difference? 50,000 less 22,500. So we have another 27,500 to be distributed for the month of February. So how are we going to distribute the remaining 27,500? So we can now satisfy the second priority. However, for second priority, to satisfy the entire second priority, we would need 67,500, but the remaining amount is only for 27,500. So meaning we cannot satisfy it in full. So second priority, it would be Vince and James. So how are we going to distribute this 27,500? So this 27,500 can be distributed in their respective P&L ratio of these two. So Vince has 30%, James has 30%. So 3:3. So meaning equally. So 27,500 times 3/6, okay, or equally 13,750. So they would both receive 13,750 for the second priority. Okay, so this will be the amount to be received by partners for the month of March. Okay, so if you are asked how much would be received by Vince in February, the answer would be these amounts, and then for James, this amount. So per Vince, that is 36,250. Okay, to a total of 36,250. For James, 13,750. Of course, Albert and Kath will not receive any amount of cash for the month of February. Next, for the month of March. Okay, so for the month of March, another positive amount. So we have to distribute 88,000. Okay, so we have not yet fully satisfied the second priority. So the amount that we need to satisfy is 67,500. Okay, but we have distributed 27,500 to this second priority. So all we have to do is to satisfy the remaining. So 67,500 less 22,500. Okay? Sorry. 27. This one. 27,500. So, going back. 67,500 less 27,500. So, we would need another 40,000 to satisfy the second priority. So, anyway, 40,000. This is our cash to be distributed is sufficient or actually exceeded, no? 40,000. So, 40,000. So, how we're going to distribute this 40,000? Again, second priority. So, it would be distributed to Vince and James in their respective P&L ratio. So, 3:3 again or equally. So, 40,000, another 20,000 here, and then 20,000 for James. Okay, but for the month of March, we have 88,000 amount to be distributed. So we have satisfied the second priority. We can now proceed to the third priority. Okay, and distribute the remaining 48,000 for the month of March. So 40 plus 48, this is 88,000. So how are we going to distribute this 48,000? 48,000. To satisfy fully our third priority, we would need 110. But again, 48,000 is not enough to satisfy this third priority. So how are we going to distribute the 48,000 according to the respective profit and loss ratio? So we have 3:3:2. Okay. So 48,000 times 3/8. So y over 8, that is 3 plus 3 plus 2. Okay, so Vince would receive 18,000 as well as James because they have the same profit and loss ratio. But for Albert, he would receive 48,000 again times 2/8. So he would receive 12,000 only. So when we compute that, 12 plus 18, of course, it would give you 48,000. Okay, so that's for the month of March. So when you are asked how much would be received by Vince in March, the answer is 38,000. How about for by James? Another 38. Okay, for Albert, he would receive 12,000 pesos only for the month of March. Okay, now for the month of April. So for the month of April, we can distribute a total of 85,000. Okay, so we have not yet fully satisfied this entire third priority, but the difference would be 110 minus 48,000. So 110 minus 48, we would need 62,000 only to satisfy the entire priority, third priority. So 62,000. So our cash for the month of April is sufficient enough. Anyway, 62,000. So how are we going to distribute 62,000? Again, in accordance with profit and loss ratio of the third priority. So Vince, James, Albert, and Kath. So 62,000 times 3/8 again. So this is 23,250. And then 23,250. And then lastly, 62,000 times 2/8. So this will be received by Albert. So 15,500 for the third priority. Now, since for the month of March, we have a total of 85,000, so we can still distribute on top of the 62,000. So 85,000 less 62,000. So we have 23,000. Another 23,000 to be distributed. Okay, now since we have satisfied all priorities, first, second, and third, so the last would be in accordance with P&L ratio of all partners. Okay, so this will be Vince, James, Albert, and Kath. So 23,000, this is 3:3:2:2. So all of them will receive some amount of cash. So 23,000 times 30%. So this will be 69. So to P&L ratio, 69 again. And then 23,000 times 20%. So this is 4,600. and then another 4,600 for Kath. So when asked how much will be received by the partners in April, the answer would be the sum of this 23,250 plus 69. Then for James, same. For Albert, 15,500 plus 46. And then for Kat, 4,600. Okay, so that's it for cash priority program. Next, we are going to prepare a safe payment schedule, and you would notice that we would of course have the same answers.